guys, welcome back to another episode of She Collects Cards. It's been a long time coming where I did a video of sit down and walking through some analysis and some market trends that we've seen recently. I've been super busy going to shows, getting cards graded, meeting up with people, featuring on other people's channels, which I'm very thankful for. But I've been just very busy, so I know that this video is very, very long overdue, but here it is. My take on why the market is crashing, and spoiler alert, I'm not going to repeat what other people have been saying. All right, let's get started. Okay, so let's talk about why I think that the market right now, the sports card market in general, is kind of crashing, you can call, or in my opinion, I think it's softening over the last couple months. And I'm not going to go into details about some of the other areas and reasons why other people thought that the market was crashing. At least in the videos that I've seen, some of the things that I saw were things are going back to normal with COVID, lockdowns being lifted. People are not spending as much time on their phones or on eBay or on Facebook forums and things like that to transact on cards. Their interest is scattered. I think that's a very relevant one. And I also heard reasons like there were so many base graded rookie cards coming back, or base graded cards in general coming back from PSA, that the supply shock was there, where there was just so much increase in supply that the demand couldn't keep up, hence the price point all dropping on average relatively across all sports. So those are some really, really good reasons that others have talked about, so I won't go into details on those, but I will give you some perspective of why I think the market is softening. So number one, and we have to go back actually to the beginning of the year to understand this, but number one reason why I think the market is currently where it's at is because of the venture capital and the hedge funds that came in earlier in the year and really spiked this growth in price points for most of the big cards that we know about: LeBron Topps Chrome, MJ Fleer, things like that, Kobe Bryant Topps Chrome rookie card, where the venture capitalists came in and essentially pumped in, let's say, probably about $20 million worth of funds into the sports card alternative asset category, and hence sort of like drove this, and I don't want to say fake because it wasn't fake because it actually happened, but drove this puff up demand, right? Where now they were going out and, let's say, for example, a single LeBron Topps Chrome rookie card, let's say, was at 10K, but they were coming in and buying them out at 10K each, and then because the demand was higher than the stagnant supply, the prices were going up at 11K, 12K, 13K and whatnot. And so this sort of ramped up demand of these cards, these key cards, in such a short amount of time, because now everyone wanted to buy this LeBron Topps Chrome card because it was the hottest and latest thing that was on the market. And so when the price points have reached, let's say, 35K to 40K, which it peaked at, now the venture capitalists and some of these big organizations and firms came in in January, and now it was time to sell because they have basically seen more than 200% gain. So now they're selling them to other people at 35K, 40K, 38K, whatever it is, at a much, much higher price than what they had bought for a couple months ago. And now with that, right, there's again like this shock of supply back into the market at a higher value. And so maybe perhaps there were 10 people on average who wanted this kind of card. 10 is a very low number, but I'm just giving an example. But now with sort of a pump back into the market with these cards at 35K, now we had 20, 30, 40 LeBron cards that were available. And so those who wanted to sell now had to compete for a buyer. So a buyer goes, hey, I want a LeBron Topps Chrome card. You quote 35, and you ask other person, say, hey, this person is giving me a card for 35, can you do better? Like, okay, we'll do 34, and so on and so on. Hey, this person is giving it to me for 30, can you do better? 29. Hey, I can get one for 25, can you do better? 24. And then you see kind of like the natural law of supply and demand happening, where now that the price has sort of peaked at its ultimate peak of, I think, 43K, thereafter people were mass selling, essentially doing a shock of supply back into the market that caused essentially the demand to just kind of be really taken aback and say, you know what, I think I can actually get it for cheaper than what it was last sold. And so it was a repeated cycle like that, a vicious cycle, and now we're at a point where the card is back down to 15K. So what I want to tell you by that is that the first reason why I think the market is where it's at right now is what we saw between January 1st through perhaps like mid-March or even late March was superficial, that it wasn't an organic growth, right? It was a lot of big money came in and then a lot of money went out, by after selling it at a higher price point. Of course, they made a lot of money. We're essentially left with this, empty shell skeleton of a market where we, saw something come in, do some crazy things, and then they bounced, and now we're left with, oh crap, like actually that whole thing was a bubble. Like we use that term a lot, but it was literally a bubble, and now we're back down to where we were probably beginning of January in terms of card prices. And a lot of people look at 3 months as like a good gauge of a market trend, but I highly encourage you to not only look at 3 months but also 6 months and a year. Even in the tax world, right, especially here in the US, we consider assets that were transacted and sold within a year as short term, and then anything above a year as long term. And there are dire, there's very, contrasting tax consequences for it being a short term, long term capital gain. And so look at it. I like to look at longer charts, like a year, to understand, like, is this actually, like a healthy growth, or is it going the other way? Then perhaps you didn't make the best decision. But I think looking at just 3 months and saying that and drawing conclusion that the market is crashing, I think is a little bit of an overstatement. And so I think that's the first big reason why, in my opinion, we are where we are in the sports card market, because the last or the first 3 months of the year was really a flashlight. It was sort of this thing that happened and went away so quickly that we're left with just what just happened kind of attitude. And if you bought high at those moments, hopefully that was a lesson learned for you, and hopefully, fingers crossed, that you didn't put in all of your 401k into this, and I really hope not, but that whatever exposure you had at the peak of things, hopefully you're okay and you're doing okay, and you've learned big time from your mistakes there. So that's reason number one. And reason number two, and this is also, I think, something that not many people talk about, is the market is getting smarter. And like, that's plain and simple. Like just last year, right, around this time in the summer, I was learning a lot about soccer during this time. But even a year ago, you could potentially, if you were in it for a long time, meaning I think more than like 2 years of this, you could essentially predict when the card prices were at its lowest and when the prices were going to be its highest. So like, for example, taking basketball as an example, NBA offseason traditionally have been the time to buy into cards because there wasn't much action going on. Players were getting traded, signing with newer teams, and there was excitement. But that ultimately was like sort of the lowest point of a card's value, because people are kind of gearing up for the season and they're making bets in a sense before the season started. And then typically we considered, for example, last season in the bubble, the weeks coming into the playoff was really the time to sell. But this year, we also talked about, I think in my earlier videos, where the right time to sell is probably not just before playoffs, but actually just around All-Star, because the market is getting smarter. The price points of these cards already have factored in the fact that people are, going to sell a lot in the playoffs. And so that's when there's going to be a supply shock of things. And so something smarter to do is to sell right around All-Star. And guess what? Like, the market is continuing to evolve to get smarter, and I think that's one of the reasons why where we are, in terms of the sports card market in general, is because everyone is getting educated. We have platforms like Card Ladder, Market Movers, eBay, all these other platforms that also give us education, which I find them incredibly helpful, as well as content and articles, things like that that really make us a little bit more educated. So when the general mass, and when I say general mass, like 80% of the population that is being considered here, believes that selling just before the playoffs is the right time, that is potentially not the right time to sell if you want to come out on top. And when I say come out on top, it's basically you don't want to ride the wave, but you want to be ahead of the wave and see more profits than you would, being part of the wave, and you want to take that risk. That is probably not the right time to sell. And another example is if everyone says, hey, Pokemon is the right thing to buy right now, and that's what you hear, from 20, 30 people in your network, that's probably too late. And that's just my personal opinion on how I invest and how I try to kind of be in the know and determine, is this the right time to get in? Like crypto is a big one. Like when Bitcoin hit 53K, I think that's when a lot of media, a lot of people talking about, hey, like crypto all the way, Bitcoin's going to, be the next major currency. It very well could be, things like that. And like to the moon, they weren't selling. That's probably not the right time to buy. That's actually probably a sign that it's too late. It's already gotten to the majority of the population. And so at those points, I like to hold and, kind of watch it kind of, go down before I kind of gain exposure again. And we've seen that with Bitcoin, Ethereum, Doge, everything like that. And so that's number 2 reason why I think the market is where it's at, is because people are getting smarter. And so if you really want to win in this, what I see as a strategy game, you have to become smarter than this getting smarter crowd, if that makes sense. And number 3, so reason number 3 of why I think the card market is softening right now, and this is my last core reason that I could come up with, is that the pie is becoming many pies. What I mean by that is, let's say, beginning of 2020, we had a big basketball pie that we were all sharing off from, but now it has become a large size basketball pie, a medium size soccer pie, a large size football pie, a small size UFC pie, a small size tennis pie, a small size F1 pie. So what I mean by that is, like, the market capital of the entire sports card world is growing. And we know that because there's like more collectors coming in, and other data points have shown that the volume is going up. So the overall market cap of the sports card market is growing, which is a great thing, because there are companies out there, because their share prices are doing so bad, that their market cap actually declines year over year. But so it's a great thing that our overall pie is growing, but that pie, the distribution may not be favorable to some of us, right? So for example, if I was only exposed to basketball for the last 24 months, like I would see price decreases because the demand that we had in basketball, some of that may be shifting out to soccer, some of that may be shifting out to football, and so on and so on. So we may not be capturing the attention of the 90% of the population anymore as a basketball pie, but there may be people who are like, hey, I like that F1 pie better than basketball pie. Or like there might be people like, hey, I like basketball and soccer pie, but I only have $10, so I'm gonna get a smaller piece of each. I know I'm like, going over with this pie example, but you know what I mean, right? So there's not a sense of like dominance of like basketball, football, baseball, and that's it. I think there's really a diversification in what we're considering as sports cards today, that it feels like the demand for basketball is going down, the demand for baseball is going down, but in actuality those demands are not dying necessarily, but it's sustaining. And anything on top that the growth that we saw, right, the last 12 months or so, in starting from 2020, those may not all be going to basketball, but it may be shifting to other areas of sports like golf, UFC, I mean, you name it, like it's all there, right? So that's reason number 3 why I think the market is not growing like it did the last 18-20 months. And that's because the market diversification is happening, and I think in general that's a very good thing for us, because just because Panini stops producing basketball cards, this market dies. Like, that's not going to happen anymore, because there's so many different ways to collect, and so many different sports in the world outside of basketball, football, and baseball that people love. I mean, soccer, the biggest sport in the world, like go figure, right? So those are the three reasons why I think that the market is, at its low point right now. But guys, remember my two big things in my channel is that number one, buy low, sell high, and you can't go wrong with that proposition. But number two, important thing is, it's going to be a bull's market until it's a bearish market, but the other way goes as well. It's going to be a bearish market until there's a bull's market. All we really need right now, like that is not organic. So I'm talking strictly inorganic things that we could do as just, the community. If we start buying out more cards, right, higher than what was comped last, like let's say 50 people who have a bankroll of 50K to spend, so that's what, $2.5 million. If those 50 people went out today, single day, and then over the next course of 7 days, went out and bought cards, big cards, that like are key indicators of like the market. So like LeBron, Kobe, Tom Brady, like these big cards, bought them for higher than the last comp. We're essentially creating this, superficial bulls market again, the beginning of a bulls market. Now, when is that going to happen? Is that going to happen? I'm not sure. But one big catalyst that could be the one is the National. The National literally didn't happen last year. So I know there's a ton of excitement. There's going to be literally every single collector you can think about in the world there. That could potentially drive those 50. I mean, I think it really only takes 50 people. It doesn't take, 50,000 people to get this rolling. If we were to do sort of like an inorganic, growth injection back into the market. But go figure. I don't know when it's going to happen, but I'm hopeful. I'm not selling any of my cards. I'm in a holding pattern. And when I see a good deal on a card that I've been chasing, I am definitely buying those cards right now or trading as well. So in conclusion, what does this mean for you and what are we supposed to do in this downtime? Number one, go find those good cards that you've been chasing. And we always talk about collecting who you like. You can never go wrong. I mean, if the price value goes down, it sucks. It loses the investment aspect of it, but you still have a card that you love and of the player that you love. So go find those cards that you have been, wanting to pursue. For example, like Kobe Topps Chrome PSA 10 went for 45K at one point. I believe it's back down to like 18K right now. Hey, if that's in your budget and that's a holy grail card that you have been chasing after, this may not be a bad time to get that and just keep it, in your collection, right? So definitely go find good buys at good deals right now. And number two, takeaway, and most important one, and this is in life in general, be patient. Don't, get stressed out over, like the last couple of weeks of downturn, but just be patient. Wait to see the market, maybe do some prediction, models, when you think that it's going to go back up, what is it going to take? Talk to other people in the community. And if you, get bored with your current collection and you're a person that need to, continue to have new things, do trades, like rotate, your collection to keep you entertained for now. And then, wait for that rebound that we all know that it's going to happen. There's certainly, unless this was a total Ponzi scheme from the beginning, which I highly doubt it was, where some people just devised this whole thing and said, hey, everybody spend money and we're going to take your money away. Like that's not what's happening here. So once there is a bull's market, there's always going to be a bear's market, and there's always going to be a bull's market after as well. And that's the cyclical nature of life. Welcome to life. So be patient with your collecting strategy and do it with just pure joy and happiness that we're all doing this for fun as a hobby, truly. So yeah, that's all I have for today's video. My take on why I think the market is softening right now and it's in the downturn right now, and what you can do, while the market is cool, to get ready for the next upward trajectory. So I will see you guys in the next video. Bye.